end of that music means we're ready for another episode of Trade Masters. Trade Masters, basically the nuts and bolts of this show. Two experienced traders bring three midweek pick ideas. They can be anything. They can be a directional trade. They can be a cash flow trade. They can be an exotic trade. You never know what these expert traders. What I love about this is that I get these ideas, and there's been some stellar ones. The most recent home run was by Greg a few weeks ago on the Netflix, the defending champ. I know a lot of people played that. That it pays for a lot of Netflix subscriptions for future years. Greg, you basically paid for our Netflix subscription for the rest of our life on that trade, right?
It's still going, man. It's like the Energizer Bunny. It's still going. So,
but good ideas. Not every trade idea doesn't work out, but I love them. People bring in midweek what they're seeing in the market. Hey, my account's down today. I want to make some money. So I want to make some of that money back. I was at all-time highs, and I'm not at all-time highs anymore. I gave some of it back. I want to make it back. Make me some money, gentlemen. We got two of the best here tonight. Greg, who you've won for like 4 straight weeks. Great ideas. Last week, 3 bearish trades. So you are not afraid to go either direction. How you doing tonight, Greg?
I'm doing all right, man. I'm doing all right. Not as many bearish picks this week.
Yeah, and Tyler, good to see you again. Looking clean cut and dapper. You are really just a young Luke Skywalker. Greg, you and I are like the old grizzled, dirty Luke Skywalker.
I'm Obi-Wan Kenobi without the wisdom or the robes. So,
how you doing tonight, Tyler?
Good, man. I'm excited to be back and got some good picks here. So
and listen, I'm excited to hear both of you gentlemen's jokes. Greg, you're the champ. You always get to decide who goes first.
Oh, we gotta let the young Jedi have at her.
Tyler, round 1. What do you got for us?
Let's start with looking at the healthcare sector, if you would.
You're gonna have to share your screen, Marco.
I am gonna have to share my screen.
You got it, brother.
XLV, if you would. If you could go to a daily chart for me. I mean, obviously that weekly is nice and sexy above the rising 90 MA. But when I was looking through the sectors, I really like this little high base going on the daily chart in healthcare. The last 2 days, this is held above the 20 MA quite nicely. So I would say it got a little bit of relative strength. So I was looking at healthcare stocks, which is not a sector I frequent all that often.
No, and defensive stocks were outperformed today. It's been the first day where in a couple of weeks where they just like, hey, we're back. You forgot about us. We're not dead.
I would agree. And XLV tends to have a little more oomph as a defensive sector than say staples or utilities. So I like that it can play both sides of that argument. So looking at healthcare stocks.
And one last thought on this, for all of us, it hasn't broken the 20 yet. I have that 20 highlighted. It hasn't broken that yet. So I can see what you're seeing there. All right. So what do you got in healthcare?
So my pick is Boston Scientific, BSX. And there's a couple of things that I like about this. Number 1, BSX is itching for a breakout over $46. Look at the last 2 trading sessions, by the way. Okay. Market has not been that good the last 2 trading sessions. BSX doesn't care. I love the bullish hammer candle yesterday. I love the follow through today on a day where the market looked relatively ugly earlier in the day. I like how this is shaping up. I like the breakout over 46. And if you zoom it out to a weekly time frame, you're going to see 46 is also long-term resistance. You might need a couple of years. If you go back, early last year is when it hit 46. So kind of the makings of a long-term cup and handle pattern here. We always like when it's breaking resistance on multiple time frames. It just gives it that much more potential umph. I also like how it's riding the 90 MA, and that's kind of pushing it up against that resistance zone. So technically speaking, good sector, good pattern, gives me a reason to try to build an options trade around this. So moving into the option side of things, like most stocks, this has cheap options right now. The implied volatility rank is at the 13th percentile. I don't mind at $45. Like, it is a good low price stock for things like selling naked puts. But in this case, I want to kind of reward this for its consistency. I want to go a little bit more directional. But I don't want to go crazy and buy a call option, because sometimes these healthcare stocks do chop around a little bit. So I still want some positive theta. So I'm going with a bull call diagonal spread. Also sometimes called the poor boys covered call. So I'm just going to go out to November. I'm going to go a couple months out, and I'm going to buy an in the money 43 strike call, which is a delta of around 69.70. So I'm going to buy the no 43.
Okay.
That's essentially my substitute for buying stock. And then I'm going to sell in October out of the money covered call. The 47 strike is what I like for October.
All right. So initial cost of the trade, under 3. So pretty cheap, right?
Yep.
Pretty cheap.
Yeah, it's about $3, and you can make about 100 to 130 bucks if this gets up towards 47, which is a 30 to 40% return.
So you're buying the November 43, and you're selling, what was the October what?
47.
47. All right. What's your trigger here? Like, in trigger, if you don't know what trigger means, it's like, what's the signal that gets us in the trade?
Today's high actually corresponds pretty nicely with the resistance zone of 46. Today's high was 45.80. Anywhere over 45.80, if you want a little more confirmation, I want to wait for 46, that's fine. But somewhere around there.
Greg, what are your thoughts?
Yeah, I love the trade. Obviously, defensive sector's been looking good. We had a shoot up in the VIX the last couple of days. So it doesn't surprise me that the overall markets had a little bit of a slide, if you will. I don't want to say pullback, but a slide. And this seemed to buck the trend. So, how do you argue with it? I love the 46 level. The fact that you can go back and look at it, a couple of years back in this case, and find a place where, it hit its head and pulled back. That's our classic resistance. And when you can get that on large time frames, that just spells awesome to me. So love the trade.
Yeah, I love this trade too. Now, Boston Scientific Corp. I've liked healthcare for a while now. I know I've been playing this through naked puts in recent months. I'm going to change that. I have a naked put expire. Not afraid to go directional here, right? Because I mean, how much? I'll probably buy shares because I don't really do trading. I do investing. But I love the trigger, because that's what I love about technical analysis, is that you can do a trade, I can do an investment, but the signal, right? It can get us into all kinds of stuff. It can get all kinds of stuff. It doesn't seem too stretched, does it, Tyler?
No, not stretched at all.
Like, it seems very orderly. Almost on any time frame you go. Seems very orderly. This hasn't been, so you don't have to worry about like it being overstretched. Market's rocky, but man, defensive stocks just keep holding up. Don't mind a variety of plays here. I'll probably, I will. What do you think, Greg, on like specific triggers? Because I tend to be like, oh my gosh, I want to clear it all. Do you think that's just being too conservative, or do you think a move over momentum in the short term is good enough?
I like round numbers. So for me, I have a rule that I have to be beyond that round number, whether it's 10% of an ATR. For me, it's 25 cents. That's my own triggers in there. The pushback I get on that is, if you look at this, we've had 3 times in however many years it's been where it's fired off that 46 and then come back. So I get the concept of people going, oh, you know what, it fakes me out too often if I just do that. For me, I just look at the round number, because who really pays attention to 40, 45, 85 or 45, it's the numbers have to, I think, kind of trigger something in us psychologically. And so for me, I look at 46, that's the resistance level. Above 46, I'm happy. Could you wait for above this red candle there? You could, but I don't know. Are you giving up too much? I don't know. It's 6 of one, half dozen the other. For me, I just look at the round number.
All right. I really like this trade. I like everything. Yeah, and I just like defensive areas of the market, which a couple months ago I started with like 0% in my portfolio. I didn't own any staples. I didn't own any healthcare. I didn't own any utilities. I've been trying to add to these areas. And man, it seems like whenever I add to in any where I'm trying to go for price appreciation, not just cash flow, I get slapped in the face and go right back to cash flow. Wouldn't mind to stretch it here. And it's nice, boring stock, a little price appreciation. If it breaks out, you can always sell covered calls later. You can do the trade Tyler did, poor boys covered call. I really like that strategy as well. I like this trade. I like the setup. I like everything about it. Now, Tyler, I haven't heard a joke from you in a long time. You got one for me.
I do have one. Did you know, Mark, the first French fries weren't actually cooked in France? They were cooked in Greece.
Fair enough. B plus. B plus. A trade, B plus joke. I'll take that trade off every time. Now, Greg, you have been delivering A trades and A jokes lately. Let's see what you got round one.
All right. Well, I'm there's an election going on in my country right now, and it seems like all the candidates are just stabbing at one another. So I kind of feel like I have to do that to my buddy Tyler today. So I'm going to steal his next trade. I don't know if it's his next trade, but maybe one that he picked out tonight. I'm going to
hope it's his next trade, just out of vengeful
spite. Out of spite, because he got a better fantasy football team than I did. But anyway, Disney going right for the juggler, taking my buddy's Disney away from him. So you're on a weekly chart there. It looks good on a weekly too. I love the rounding bottom on the weekly. Love the way it looks even on the daily, even better. It's we just made this top here right around the 186 there. It's cleared all the moving averages. We've got all these moving averages bundled up. It's working. It stayed strong the last 2 days as well. A little bit of pullback on today's candle. I'm not worried about that because we're going to trigger in above that anyway. I just like where Disney's at in comparison to some of the other, Apple had pulled back today. There's a few stocks that I saw today that had some pullbacks. This one seemed pretty solid. You've got some of the same resistance back in, I can't even see what, back 2-3 months ago. So this area I think is important. What I do like about it is the fact that if you go 9 months, if you go back to where you can see the 50 MA there, it touched there and touched a couple times, right around like the 186 level there. So this is definitely a resistance point as far as I'm concerned. But what I really like about this is getting in above where we are now. I think it's a quick run to 200, maybe even 203 would be the resistance level there. So I think there's a lot of space here. I had a couple different trades here. One was very directional and one was even a cash flow, and they both looked fantastic. But I'm going to stick with the directional because, like I said, I honestly think that we get a quick trip up to 200. So I looked at the October 15th.
You know what I like both of you, what you've both done in this first round? Picks stocks that have good directional setups that showed relative strength the last couple of days while the market was choppy. Because market turns not choppy, right?
See ya. It's off to the races, yeah. So the trade I like is the October 15th, 185, 200 bull call. The debit's about 439-ish.
About 439.
Yeah, so 185 and the 200 bull call for the October expiration.
All right. So, I mean, and that's putting you essentially the call you're buying is basically where you're going to be getting in, and the call you're selling is up near resistance. Pretty standard, right?
Correct. Yeah. Just, you got to look to see where it's going. It's like riding a motorcycle. You don't, you look where you want the bike to go. You don't look at the road. You don't look at the bike. You look where you want to go. It's the same thing I do when I look for these directional trades. I want to look where I'm going. I want to see it. I see the 200. It's a big round number. It's a place it's been before. Like I said, there's not a lot slowing it down in between there and now. So I think it's a great little setup there. And like I said, for 439 debit, the 185 200. That's an easy bull call trade with a really good risk reward. So if you buy the 185 and sell the 200.
All right. So let me play devil's advocate here.
Sure.
I'm getting about $1 credit on the 200, right? Why not just the call? Because
Why not?
I
Okay,
made money on the. Listen, you're so good, Greg. I think about how much I could have made on Netflix just buying the call on the directional play.
Well, and that's easy. You buy the call. The 185 call is $5.55 a share. That's $555. That's usually outside of most people's wheelhouse for risk, right? So with the bull call, I'm just reducing the risk.
Make it accessible to more people.
100%, right? You get that down to 439. That's more acceptable to a lot of people. Now, even with that trade, I personally would not let it go to zero. I wouldn't let it go to max loss. Even 439 is still too much, but it's better than the 5 whatever. Now, if you wanted to leg into this trade, I got zero problem with that at all. I've done that as well. But for me, I just look at the trade. I think it's a really good risk reward, right? It's an easy kind of setup here, and then you can find yourself a tap out point. I would say about 178-ish as a tap out point there. That's below both the 9 and the 20, and a support level there as well. So now you're risking 150 to 200 bucks for a potential 15 minus 4, so you're about 1,000. So you're risking 200 to make almost 1,000. So you've got a really good risk reward, and you've got some support down there. Like I said, somewhere in the neighborhood of 170.
Somewhere below the moving averages, basically.
Correct. Yeah.
So like if you cleared all of those moving averages, you're probably cutting your trade in half, lose a couple $100 bucks, more or less.
And it's a couple $100 bucks for a lot of people. That's within their wheelhouse. If you've been trading a while, most people can handle a couple $100 loss, especially like I said, with a $15 wide spread, and you're only paying $4.39 for it. You're looking at, like I said, was that almost $1,000? Not quite, a little more than $1,000, I guess. So 1,060, I think, if my math is correct. So, like I said, that's a heck of a risk reward as far as I'm concerned.
One of several things. There what not to like about Disney right now from a big picture, but like from a thematic standpoint, COVID has, since the Delta cases went up, Delta cases have wreaked havoc on like charts and patterns in so many areas. The need people stocks like Delta, you go around the world of stocks impacted by COVID, right? You go around the world, stocks by, you get these real short downtrends and then choppy patterns. You even go to crude oil, sharp downturns and then stabilization. You didn't really see that on Disney, did you? So, directly impacted their whole business model. Well, not the entire, right? Disney Plus, all that good stuff. But you didn't see, when you started to see like COVID related companies that were impacted, you saw choppiness in Disney. You never really saw sell off. Goodness gracious, you actually get some good positive Delta data that's actually showing that it's peaking. Who knows? I've read different scientists say different things, that the peak is here, that's not here, that's going to happen. A lot of guesswork, educated guesswork, but still guesswork. You get some positive COVID data on top of what, just all kinds of Disney Plus doing great. Their movie out this weekend doing great. They have catalysts bottled up. Man, you get a catalyst at all, man. I could see it, a straight trip to 200 on this one. Tyler, I've seen you trade Disney for years now, off and on, all the time, right? It's a stock that you're always trading. What do you think about this?
I had Disney on my short list, so Greg, good call. It wasn't one of my 3 I was going to mention, but it was on my short list if you took one of the other ones. So I entered a trade today on Disney, and I own shares. So obviously I like it. The irony is, right when I entered my trade, it went down. So I will, you can blame the intraday sell-off on me. I top ticked it. But yeah, the reason I liked it was the relative strength. It had a little volume pop yesterday and today as well. So I love this chart, and I hope Greg's right, and I hope it does rip to 200.
Specific triggers. So let's say, whatever it is, let's say I do a bull call spread, let's say I buy a call, let's say I buy shares, whatever the trade is, where do you both get in? What's your trigger to get in? Above the today's high?
I would use today's high if I wasn't in, yeah.
Yeah, what's that red candle? What's the high on that red candle? Is it just pretty much the same as today's high?
High on the red candle was 187.58. High 187.46.
There you go. 187.50. That's my trigger. Take the average of those two, and I think you're pretty happy. So,
out of curiosity, what was your cash flow trade on Disney going to be?
so yeah, just a bull put spread. The 175, 170 for 63 cents. So over, say 12%, 11%, whatever it was.
175 what?
175. So October 8th. So 30 days out. 175, 170 bull put spread.
Yeah. I mean, the stability in COVID of Disney, I don't want to get left out. I will feel stupid if I don't make money if it breaks out and Disney goes up. There's too much juice here.
Yeah. Sorry, just to throw this in there, I actually thought about doing, doing say 3 contracts of the bull put spread to finance a call option, a straight call option, and then if I needed to cover it as a bull call, I would have. So there's all those different variations that you could throw into the trade. I think the bull call myself is the easiest, and I think the reward is definitely there for it. So that's
I think you both brought 2 good ones to start this show out. Now, can you beat the grease French fries joke, Greg?
That's tough to follow, but I got a joke just for my buddy Tyler, and hopefully it goes off well. But anyway, and God said to John, "Come forth, and you shall be granted eternal life." But John came 5th and won a toaster.
Say that again.
And God said to John, "Come forth, and ye shall be granted."
Okay.
Eternal.
That was good. That was good, Greg. That was good.
That was a nice, clean joke.
That was a clean, clean religious joke. I like.
That's a joke you can tell in church.
Exactly. Well, I don't know if I'd tell that in church, but
yeah, no, I think most churchgoers would appreciate that one.
Yeah.
All right, listen. 2 good picks. Healthcare. I think that's 6s. Very, very, very good picks. I'm probably going to do them both. I'll probably buy shares of Boston Science. I'll probably buy an option, do some kind of option strategy, maybe poor boys on Disney. I don't know. I like them both, though. Let's see if we can keep this momentum going. Tyler, what do you got round 2?
Yeah, give me Macy's. Ticker M. Why don't we start on the weekly chart?
I can never get it right. I started on a weekly. You want me to go daily. I started on a daily. You want me to go to the weekly. I can't, it's just,
I know. My apologies. Okay, so on the weekly, I love the breakout bar 4 bars ago. The push over 20 took out the 200 weekly MA. 20 was major resistance. 20 has been resistance all year long. We tested it 1, 2, 3, 4, 5 times. 6th time was the charm. So took some time and then finally blast through it, not randomly, but on earnings. Earnings was the catalyst.
No, and just to highlight what you just said, so this green line here is the 200 weekly moving average. And this is very common price behavior. Comes up, slap down, comes up, slap down, comes up, slap down, very common. And then you got that boom, right? Catalyst, boom.
Yeah, so when it broke out, on a magnificent earnings, by the way, we've seen this a few times this last earnings season. Some of these companies, Dick's Sporting Goods, another one I think about that just blew the doors out, goes up like 20% in one day, and then you feel like you missed it, right? So then like the leopard in the savanna grass, I'm stalking this, saying, okay, come to Papa, gotta wait for the next fat pitch, and sure enough, trickle back. You got two weeks down. As terms of the weekly, does it come back down to 20, 20, 50, 21? I don't know. I just know that vicinity, per the principle of polarity, that old resistance likely to become new support. So it's pulled back enough where I'm starting to get interested in trying to play this dip.
No, and this is a common principle in technical analysis if you're a new trader, that when something breaks out of this resistance level that we're looking at here, it's very common. Nothing's 100%. It's very common for that old resistance level where price stopped to be a price level where it actually starts to catch and acts as the bottom. The top becomes the bottom.
Yep. So if you look at the daily then, so if I say, okay, I need evidence of buyers coming in. So then I go to the daily, get a little closer view here. And I see, oh, nice. It tried to hold the 9 EMA, couldn't hack it. Unlike Disney and Boston Scientific, this guy fell with small caps over the last couple of days. That's okay. Still at the 20 MA. And I really like the major weekly support sitting at 20. I need a trigger because support is an upward move in price, and we've just gone down, down, down. So I'm waiting for a trigger here, Mark, but I want to be anticipatory, not wait for 5 days after the fact and be mad that I missed it. I'm anticipating this bouncing in the next day or two. Right now, today would be today's high would have to be the trigger. This is a cheap enough stock at 21 bucks that you can get some really, really nice premiums selling naked puts. I like the October 19 strike. It's sitting around 52 cents or so, which gives you like a 25% return on margin.
So what Nick?
October 19. It's got about a 23 delta. If you wanted to push it, you
October
could go 18. The monthly.
The monthlies.
Yeah. So the 19 strike at 23 delta. Normally I like a lower delta, but I like where 19's at on the price chart. So I'm going to go a little closer, a little higher delta to get a little more juice. If you wanted further out of the money, I don't mind the 18 either. They both have good ROIs, but in this case, I'm going with the 19.
All right, so that 19 gets me 50. I have a lot of choices of strike prices here, right? I could make a lot of ROI cases work here.
Yep.
At different strike prices. One of the things that I oftentimes like to do, I'll either sell it above, basically betting that old support acts as new resistance. Old resistance acts as new support, exactly.
Mm-hmm.
So if that old resistance does act as new support, getting that, put in close to there, and if support holds, on getting into a potential, or just getting a credit, selling it back in the range, they can provide attractive opportunities. Let's talk about the specific trigger. All right.
Yep.
So you still want an upward momentum signal, correct?
Yeah, I don't want to sell the put today if I can sell it for more tomorrow, right? So I still want to try to nail it when it's turning and going in the right direction. Yes.
So if it cleared today's high, so narrowing in, that's an automatic. You sell the put, correct?
Yeah, I don't know if you don't take it over today's high, then I don't know what the heck you were waiting for. Like that to me is the obvious trigger here.
Yeah. Now let's say it goes down. Let's say you have a similar candle or something tomorrow. Are we just continually looking for a trigger above the day's high, wherever that is? So let's say that's the high tomorrow.
The answer is yes, and quite frankly, you probably like it more if it comes down one more bar. It makes it easier to move to the 18 strike if it comes down another bar or two. So I wouldn't mind it. I would start to get nervous. Not nervous. I wouldn't like it as much if it goes below like $20.40, because that's kind of the cluster of peaks previous. You've got the line there. If it wants to stay clean, it'll bounce between here and $20.40. If it probes below that, not ideal, but could still be in play.
So we're basically looking at like wherever that candle. It could be tomorrow, could be 3 days from now. We don't know. I mean, we don't know what's going to happen. We can only plan for contingencies. But wherever that momentum starts to shift, that's where we trigger into the naked put. I like it. It. Greg, what do you think?
Yeah, these are classic, what I call classic Tyler trades. You're seeing something good coming your way, and you're getting prepared for it. I think it's great. I love the blast off from 20. I own Macy's for a long time. I've made lots of money off of it. It does what you want it to do a lot of the time. So I think it's a great trade. I don't think you can argue with it. Technically speaking, it's decent. I love it above the 200 weekly MA. Yeah, it's just hard to beat. Nice trade.
And you got that rising 20 weekly that hasn't been tested in a while. That's going to be rising into the 19 level. Yeah, I like this trade a lot. Nice conservative thing. And if I get put the shares, easy to manage, right? It's Macy's, good volatility. It can sell covered calls. Not so expensive that's going to put stress in my account. I don't own any retail right now. Like the
Well,
trade,
and,
like
and in the retail, there's a lot of crap in retail. It's been a tale of two markets, right? Like they're Best Buy, Bed Bath & Beyond. Some of those have really fallen out of bed. I like that the earnings have really turned around on this, and they just did. They're in a good spot fundamentally, which makes you feel a little better if you get assigned on them.
Yeah, yeah, and if you don't know the backstory of Macy's, there was questions about Macy's going bankrupt at one point in the past, and whenever you have that alleviation, because that's not on the table. Well, I heard about ExxonMobil. I mean, all kinds of stuff a year in the last year and a half.
Yeah.
They're not going to make well. Earnings have been robust. Whatever they're doing from a fundamental standpoint. When's the last time either of you shopped at Macy's?
Never. They don't exist in Canada as far as I know. So
The shirt I was going to wear, besides this Gruffy one, was actually from Macy's. But then I decided to no, I don't change my shirt. So like the trade though, like the trade.
I got a
Tyler,
joke. Ready for it?
Jokey joke time.
Okay, look. What kind of tea is hard to swallow?
What kind of tea is hard to swallow?
Reality. A little better?
But
A joke. I mean, a trade. I've loved both your trades. B joke.
So I got a good third one.
You know what? That might become an A+ joke depending on how my kids like it, because I can tell it, and they might like. I'll tell them jokes that I think are lame, and they think it's the funniest thing ever. And I'll tell them jokes that I think are funny, and they think it's the lamest thing ever. So
that is a doorway joke into a lovely conversation about perception, reality, the real world. You can straight up go down on that thing.
Okay, Jedi. Greg, what you got? Tyler bringing it. You knew he was. Tyler's not been here for a few weeks. You knew he was going to bring some A+ stuff.
Oh yeah, for sure he has. Well, I'm going to go to the exact opposite end of the spectrum. We're going for a big boy trade right now. So how about Tesla?
Oh my goodness gracious.
Yeah, be afraid. Be very afraid when Old Money Home's talking about Tesla. This one's again easy to see. Strength the last 3 sessions, right up to a level of support there, right around the 765. Yep, goes all the way back to right there. Yep, perfect. This is just your classic run-of-the-mill breakout. You've got all your moving averages lined up just the way you want them, 50, 29. It's above all of them. You've hit this level of support a couple of times, so we're building up energy to break out. Big cup and handle here, like, monthly cup and handle. What I like about this trade a lot, which is kind of interesting, is look at these two.
Is there a cup and handle on the monthly chart?
I don't know. I didn't look at the monthly chart.
You said monthly cup and handle.
No, well, cup and handle over the months. Like if you look at the daily chart, so what I like is if you look at these two wicks way back here on the left-hand side of your chart, see those big tall wicks? If this only gets up to those, that move with the trade that I've got set up for you is perfect. That's a really good way to target what we're going to do here. So I don't know how many times you guys have traded Tesla in the last little while. The options are brutally expensive. So I had to get a little creative with this one, and I decided to go with a butterfly.
All right, I'm going to let you build this. You share screen, you build this one.
All right. Let's see, go there. All right, can you guys see my screen? Please let me know.
It's coming up. Yep. We got it.
All right. So again, big cup and handle here. We all went through that. My target for this one, like I said, 880. So looking at this trade here, actually, I might be able to just go right to the Analyze tab. No, it didn't build it for me. So I'll rebuild it. That's fine. So what I did here was I was looking at the October monthly, so 37 days out. I went to the 820. Now, I did this for a reason. Originally, when I like to do these things, I like to go to where I think it's going to get to. I did that. However, when I did that trade, as you can see, these things are brutally expensive. Like big, this is a big boy trade. My whole thing about this is I want everybody to be able to participate. So I had to get a little creative with this one. So I chose the 820, which if you look here, 820 is right about here, right about this ledge right there. So there's a ledge here, an old ledge there. that if it gets to 820 and stalls, that would still work out really well for us. Okay, so I chose 820. So I'm going to sell 2 of those. We'll get 2 of those on deck there. And what I did was I wanted to, because here's the thing, because I think it could get to 820 and stall, or in the time it could still get to the 880. I wanted to participate in that move to 880 if I could. That's why this became a broken wing butterfly, which is just essentially different strike prices, right? So in this case, I'm going to buy the 790. And of course, it gave me I clicked the wrong one, that's why. And I'm going to buy the 830. So we'll get this to a buy. And then we'll go and analyze this puppy. And this is what our trade looks like. Okay. It has it has limited upside, but it has a positive limited upside. If it happens to hit and stick the landing at 820, right at expiration there, this is a home run trade. You're looking at around 2,300 bucks. Our cost here is 670 out the gate. So still expensive for folks, but when you consider looking at what the cost of these options are, 670 seems awfully cheap to me. Now that's assuming you let it go to fruition there. Even if it goes up and goes to the moon, gets to our 880 target, you're looking at 1,330 bucks. 1,330 bucks if it goes to the moon. So that's not quite, it's just shy of 2 to 1, which I like. That's what I'm looking for. However, there is a caveat here. I would not let this thing go to max loss. I would have a stop loss down below this 20 MA here. So this is a rising 20 MA. I like the 720 level here. You can see that I drew a line here. If this thing tanks and it breaks this 730 support level and then breaks the 720, then I'm out. And so in this case, the 720 is right about there. So now you're risking about 235 bucks potentially to make 1330, or possibly, if we got really lucky between now and expiration, 2,300 bucks. So it's a big boy trade in the fact that it's going to cost you 670 bucks to get in the trade, but the potential risk reward here is massive if we get just this run up through these old.
So I mean, this is definitely skewed bullish, right?
Oh, 100%.
Like this is because sometimes butterflies can be. This is skewed bullish. So this is, and we're using October.
Yeah, October 15th. So the monthly.
So
option.
this is skewed short-term bullish. All right. So
correct.
We're to get into this trade, we're gonna on a lot of trades. Like if I want to do a call option, a bull call spread, by whatever short-term directional signals I'm going to use, I would apply here. All right. So let's talk triggers. Are we getting in above today's high?
Yeah. So today's high is what do we got there? So 764. So anything above 765, I'm interested in this trade. I'm not too worried about this particular one candle here. Like I said, this was support and resistance way back here, which is the same point that we're at right now. So above the high, yeah, I'm interested. This thing's had a nice little, higher lows, higher highs, higher lows. If I can draw the channel here, just channeling nicely. Maybe it chops sideways a couple of days. Who knows? If we get that breakout, I think you're well on your way here.
Okay. Any concern on Tesla's? I mean, Matt's brought this up in the halftime report a few times. I mean, Tesla's not been a great breakout, over the several months now. It takes a little umph, comes down, a little umph, comes down. Any concern with that, or is it just the strength of the overall channel here?
Well, so the ATR, so we're not asking for the moon here, right? So the ATR here is 1965. So let's say 20 bucks, right? We're only asking it to get to 820, which is a move of about 60 points. So that's literally 3 days, and we have 37 days to get there, right? And we actually want to get there wherever we end up. Looking at the Analyze tab here, wherever we end up, whether it's at 820, 880, whatever it is, I want that to happen right at the end, ideally, right? Because this purple line is going to move to our blue line. So yeah, I'm not concerned if it does what it's doing here. And you know what? I don't think the breakouts are that terrible, right? So a breakout here got us 43 to, so that got us 60 points. Then this one got us, so the breakout would have been 723 to where we are now. So that would have been 40 points or 45 points. So yeah, I'm not concerned even if it does this, it's 37 days. If it keeps going in this same manner, that would be fantastic. If we extrapolate these lines, extend to the right, if we extrapolate these lines, not the one I wanted, right? If it just creeps up there, that's going to get us, in the next month or so, it's going to get us right to our 820 target, which would be best case scenario for us. So I look at this and I'm not worried about the time that it takes to get up there. Because even let's say we don't get there. I don't care. Get to 800, get to 810. You're still killing it, Like even if we only got to 810 at expiration, that's $1,300 for a $200 risk. Like, I don't see how you can't love this.
What do you think, Tyler?
Well, I mean, at least he didn't bury the lead. He started with this is a big boy trade, so that it is. What I like about using butterflies for Tesla is it allows you to tailor the cost structure to whatever you want, right? So if Greg's version is a little too expensive, you can shrink the spread width, right? You can really tailor fit these to how much money you want to risk, which I really like. I think the broken wing butterfly is a less aggressive way to do it than just a straight up bull call. So I like the trade structure. If I were going to go directional on Tesla, I would probably structure something similar. It would be easier for me to do some kind of broken wing butterfly than a straight up bull call. So for directional bet,
so many
I like
people
the
love
trade
trading
structure.
Tesla, right? But there's so many of the classic strategies. I mean, even selling a naked put, right? It's just out. I mean, I don't care if you go away. It becomes cost prohibitive for so many different accounts.
Yep.
And so I do like creative. I mean, even if I just did a straight bull call, let's say I just wanted to play directional, that's still pretty pricey, right?
Oh yeah, I looked at that first.
It's
I looked at
really
those other
pricey.
trades. Oh yeah, it's big money, right? If we do just the bull call, get in at the 7, let's even go out of the money, is 760, right? And then we want to get to 880, if that's what you're thinking. Oh, sorry. Yeah, you're $3,000. That's just more than I want to put in a trade. Because worst case scenario, I fall asleep for the next 37 days. Okay, it cost me $670. That's a far cry from 3,000, right?
It is a very creative way to play a directional play. I mean, because you want to be able to take advantage of, and this is the thing you learn as a trader. You want to be able to take advantage of good setups when you see them, but you also want to keep everything within your trade management risk window. And sometimes, high expensive stocks, and that can be vary for different people. It all depends on the size of the account. That's all relative. There's no judgment. You got a $10,000 account or you got a, $10 million account. We are where we are. We want to grow it. We want to grow it. And, just certain stocks that get too priced to do almost any normal strategy for most people. And so I like the creative thinking here. I think I like the creative thinking here. Directional signal though. Final question on this: is there a way for me to get out? Let's say I get a good run up. I want to take some profit. How would the management of that be? Let's say a good run the next couple weeks.
Yeah, so just pick a target, right? So if you come up, like I said, there's some shelves here. Shelves, I guess you'll call them. So 802. There's another shelf here right around the 820. Right, the management of, if it hits there and you're happy with let's say it goes to 802, right? 802 is $400, so you're risking 200 to make 400, so you're 2 to 1 there if that's where you want to get out. Then if it gets to 820, that's $500 if it happens. That's if it happens tomorrow, which is not going to happen tomorrow, but you know what I mean. So any of this is gravy. If you get to the point where you're happy with the percentage return, close the trade, close the whole trade, and be done with it. And then if you still like it after that, you can always reopen another trade. But yeah, if you've got a profit target in mind, I always say, hey, pick a percentage that makes you happy. 100%, 70%, whatever your juice is that you want to get out of a trade, do that. Or what I prefer to do, which I think is a better deal, is if it hits a near-term target, then start put a trailing stop on the trade. or at least put an alert in. As soon as you get the alert, if it pulls down, close the trade out, take the cash, right? Like I don't think you can go wrong. Just pick a spot, right? If you're going to do a trade, have a trade plan where you've got a spot in mind, and I think that's the key.
All right, jokey joke time.
All right, this one you're going to be able to tell your kids. What do Alexander the Great and Winnie the Pooh have in common?
All right, I'm ready.
Same middle name.
That is surprisingly funny. Like
That's good.
that's a punchline I didn't see coming.
That's a dad joke there for you. You can tell anybody that one. So
Tyler, let's finish this off. Final round. What do you got?
All right. Pull up GDX for me. You can probably give this pitch, Mark, yourself, but here's the deal. Let's start with the weekly. Gold stocks are at a very significant level. $30-$31 has been major resistance first, then major support. We've hit it multiple times. So I love that this is at an interesting long-term support zone, which tells you to perk up and pay attention and look for evidence that buyers are swarming. And the last 2 weeks, we're 2 days into the current week, but prior to the current candle, you have 2 green bars, one of which took out a prior bar's high. So I like the strength that we saw last week in GDX. Also like the fact that gold prices, if you want to pull them up, you can. If not, you don't have to, but gold prices have rallied significantly back from their lows, a month or two ago. Gold stocks have not done as well. I think there's some room for catch up there. I really like on the daily chart, when you look at the formation, the bottoming attempt of GDX, you've got some really good volume on the last 3 thrusts. So the last 3 advances or 3 upswings, you've got some volume spikes showing conviction and big buyers behind those. In comparison, the last 2 days have not been that bad. Haven't been that bad. We had gone pretty sharply into the 2050 MA. Not surprised to get rejected on the first attempt. But I like how the volume has been mild these last 2 days. I like how if we bounced right here, this would be another higher pivot low relative to the previous one in mid-August. So I like kind of the shape of that ascending channel that we could be getting here. So I need a trigger, which is taking out today's high. But I feel like the evidence is good enough to give me a green light for lobbing some naked puts down here. And quite honestly, we had GDX on our options report, and I like that it recognized that it was up quite a bit going into this week. So it's like, here, I'll throw you a softball. Let me pull back a couple of days, give you a better entry. I'll even give you a nice little intraday reversal on Wednesday to start to, pull you in, so to speak. I'd still wait for the trigger of today's high. I like selling the 31 naked put out to October, or even the 30 naked put. Both of them I think are fine. And your obvious stop point, if this takes out 30 and a half, that support zone, I think you could jump ship unless you want to buy shares down here, which I am. The ROI on both of those is decent. So that would be an October monthly option.
Yeah, getting about 62 roughly dollars for the October 31 right above support. I mean, this is a pretty classic trade, right? Something that has a long-term support, and I had not even, I analyzed all this time and I had forgotten, that this support level is lining up with the breakout level. I mean, we talked about this principle at the start of the show, right? Old resistance sometimes acts as new support. And let's just even highlight this on the monthly chart to even make it stand out a little bit more. So we got this old resistance level, right? Breaks out, and then many months later you come down. Price has memory. Old resistance, which was acting as the ceiling, has now been acting as support, almost as if like technicians and technical analysis works on occasion, right? Pretty clean cut. Why do you think, because this is something I want you both to answer this, because this is a pretty good trade. I mean, this is pretty textbook classic, you know. Why do you think gold miners have lagged behind gold in the run up the last couple of weeks? Because gold came down to the lows and then just shot right back up. Gold miners have just lagged. They came down, but they've lagged in the relative move up. Any speculation on that?
I mean, the first thing I would do is I would go look at related stock industries like XME, the metal and mining ETF, or basic materials XLB. And when you look at those, they've been okay. They haven't been terrible. So I don't know. I'd have to dig for a good narrative. Off the top of my head, I don't have anything.
I think it's always a battle. When gold starts to get really bullish, usually the stocks and the ETFs are leading the price. And when it's just kind of dull and drab, which is what we've seen, with the exception of last couple of weeks or whatever, you find that the spot price usually goes ahead. So I think it's just waiting for a blast off, especially if the spot price can stay strong. But I don't really have a reasoning, I guess, for that.
I've tried to spec because I'm always trying to dig into the cause. I haven't been able to come up with any. The thing I like about the strategy selection, and raise your hand out there if you've experienced this frustration going direction. Gold got a little ump off the bottom, right? Got going, and they get. I mean, I've seen this everywhere. I've seen this in FCX. I've seen this in some of the real. It seems like nothing can get traction right now. Not in the classic momentum. It lifts off the bottom, gets going, and then just gets stuck in mud, comes down. It's just so frustrating, because I've been trying to stab at price appreciation here and there, and I'll continue to do so on both Disney and Boston Science. I'll continue to do so, but I like the cash flow seems to be because it just seems like anything gets going. Like you look at FCX right now, and it's the same thing. It's like comes off support, right? Gets going, and then just can't get a thrust. And we see this as maybe it's the August, September blues, who knows, right? But the plain simple fact is those cash flow strategies have been working pretty decently. Even if we can't get that up, and better times will always come up. Better times. So I like the premium. I like the play here. Last question on trade management. I'm stubborn. I stick. We have a pretty clear support level though. If that breaks, Bell-Shep, take the loss.
I mean, that's the safest answer.
Because it's pretty clear,
it's pretty obvious where bulls have failed. There's no doubt about it. And you could say, well, what if I get shaken out and then it goes back up without me? Obviously, that would be the argument for allowing assignment. But I guess, Mark, I would hasten to add, you can always get back in. But why not get out if it breaks major support and then say, GDX, you don't have to pull me back in if I'm going to get back in.
I mean, because this isn't little support, right? This is a big, gigantic support level with not a lot underneath it.
And I think if you're going to use that stop loss, that would be an argument. Go ahead and sell the 31 strike, get additional premium, because even though it's slightly closer, you're going to bail quickly anyways. So why sell a 29 put or a 30 put if you're going to bail quickly anyways?
All right. Finishes off with a joke.
Mark, why can't you hear a pterodactyl go to the bathroom?
Why can't I?
Because the P is silent.
I like that one. Listen, this has been G-rated joke session, and I've enjoyed them as a whole. That was my favorite joke at any time. I don't know why I like that one so much. I did though.
It's tough to beat a bathroom joke, man.
A bathroom joke with vocabulary. I love it. I don't know why. I have no idea. It probably says something about me. Probably not good, but I like that joke. Greg, good show. Lots of solid picks. I mean, just solid. Got some nice cash flow plays. Got some directional plays. Got a little mix. Finishes off.
Yeah, I'm going to go cash flow for the last one. Let's go to Comcast.
Oh, what is Comcast?
CMCSA.
5-letter tickle symbol.
Five symbols, yeah. So you got the weekly there. That's good for looking at the breakout there. But what I really want to see is the daily.
Of course, because whatever I start on tonight, you want the other one.
We got to put you to work, buddy. No.
All right.
All right. So love this. This is classic Tyler, as I would call it. Big breakout. You guys can see where it broke out, say 6, 7 sessions ago. Big strong move right up to that all-time high. Pull back right to the 20 MA. Nice little doji action today. Would not surprise me to see this be pushing back up to 62 by tomorrow, or maybe even a chop sideways. In this particular case, I don't care. The 20 is acting as support, which it usually does. It also happens to coincide with the breakout level, which makes it even stronger, in my opinion. And so, like I said, I love the setup. And now when we build a trade, I love it even more. So if we go to the October, I believe I used the 15. Let me just see this here. October 15th. Yes, I used October 15th. So if we go to the October 15th, I want to do a bull put spread. I like the 57.50, 55 for $2.50 risk. And we should be able to get about 34 cents out of that bad boy.
We get about 34 cents, 250. What's that? 15%?
13.6%.
13.6%.
Yeah. So you're 13.6%. You're at a 26 delta. But what I really like here is look where 57.50 is.
That's what immediately I wanted to go check out.
Look at the protections you got. You've got moving averages. You've got levels of support and resistance. Yeah, I think that's fantastic. And the other part of that for me, and again, this is not for everybody, if this thing gets down to 57.50, plus I got my 34 cents, I'd probably just pick up the stock because it's a quality company as well, pays a decent dividend. So yeah, easy peasy cash flow trade, no stress, just simple cash flow.
Yeah, I mean, because there's a couple things on bull put spreads. You analyze what's my return, right? We all have our different parameters. Some, have a minimum 10%, some whatever it is, right? But we get our run, it's within our realm. And then we know our risk, our risk here is about $2.15. So 215 per contract, getting about 15% if it works out. But then where I'm really interested is what is there to protect me? What do I got to protect me? Downward movement occurs. What's to protect me? I got some rising moving averages. So let's just walk through, what's above, we got, the 50, it's held pretty good as a general rule, been some choppiness. We have perhaps most importantly, the old breakout level, and walk me through if you see me miss anything. So I got the old breakout. So here's the two lines. If it stays above, and that's a couple cents, but if it stays above that line, I win.
Yeah.
I win the trade if it stays above that line, right?
So right there, you've got your 20 weekly, which
I got my 20, and I was wondering where that was in the whole equation because I didn't know. Yeah. But I got the old
20. Breakout
level that can act. I got the 20 weekly, and that thing hasn't failed. Yeah. When's the last time that thing failed? Let's check. When's the last time that thing failed? Clear back last year, right? So yeah. It looks like on earnings, we don't have earnings coming up, right? Between now and then.
Nope.
So on earnings, catalyst event, rebounded, but, failed. But it's been pretty money, right? Come down. We've had basically 1, 2, 3, 4, 5, 6 approaches and haven't had approach in a while. So that has to give out before earnings and the breakout level has to fail. So screw all the daily moving averages. I know they're working, but I got this major stuff. I got the old breakout level that can act as new support. I got that 20 weekly. Can it break? Sure, absolutely, right? That's why you don't go do 1 million contracts. Yeah. But it is why I'll go do the trade. I really like it. What do you think, Tyler?
I like Comcast. It's very consistent, slow and steady mover. This was a bull put, yes?
Correct.
Yeah. I like the way you played it. It's so slow, but they keep buying the dang dips, man. And the relative strength is impressive. I like the breakout last week. It's a good chart. Yes, I like it.
No, and I like, in the situation, because you never know what the market has in store. But I like the Greg's kicker too, because on bull puts, we can take the loss, but we can also reevaluate during the process. Now, this I think has a ridiculously high percentage probability of winning just because of the layers of support working with it. But you can always do I want to own the shares, right? You know, and from a fundamental perspective, talk to me about Comcast from a fundamental perspective. Like, let's say I'm in a trade management decision and that 20 weekly does give out. And I'm like, gave out. You know, what do you like about Comcast, the company?
So, solid dividend payer. We actually did this on buy one, dump one, hold one. I want to say, I don't know, maybe a month ago, Tyler. So I don't know, 3-4 weeks ago. We actually broke this down with Fox A and a couple of different companies in this space. This company has a ton of assets. Like, I mean, like you're talking, don't quote me on the number, like 274 billion in assets versus only 100 something in liability. So they have this big wide spread. So they've got lots of that. They got billions in free cash flow. They've got a great dividend history. They're just solid. They're just not going anywhere. They've got, you know, they got their fingers in a lot of different pies that create a lot of revenue for them. They're just solid. They're more of a stalwart than you find in most of the other stocks in this industry group. So if you do a fundamental dive on this, you're going to see that it's pretty rock solid. So again, for me, knowing all that and knowing that it's paid consistent dividends for years and years and years and years and increasing dividends for that matter, like I said, if this thing does tank and it does break all that stuff, I'm an investor and a trader. I'd be happy to invest in this company as well. So
yeah, I'll do that.
That's the icing on the cake. So
I'm gonna do this trade. There's a few of these trades tonight, and I do. Listen, it's not a shtick when I say at the start of the show. I love Trade Masters because it gives me ideas. I wanted to see this. I got 2 eyes. I only got 16 and a half hours of waking hour a day. I wouldn't have found this trade. This is what I love about having a community. I like the trade. I've found nothing fundamentally technically wrong with it. It's been a beautiful show. It's been a nice, clean joke night. Now, of course, Greg's going to finish us off with a final joke that's like this filthy, raunchy, you can't tell, but...
It's not that bad. It might be a little dark.
Oh, my gosh, it is that bad. If Greg's saying it's not that bad, it is that bad.
Got a PS5 for my little brother. Best trade ever.
A what?
I got a PS5 for my little brother. Best trade ever.
I'm totally missing it. Like,
I got a PS5 console for my little brother.
Yeah.
Best trade ever.
Oh, for my little brother. Okay. I couldn't make the literal leap there.
I should have. It was my fault. I should have had more of a pause.
No, that's a funny joke. That's a funny joke. I'm just slow. Listen, this has been a great show. I mean, trades I know I'm going to do, if I get a breakout on either Disney or Boston Science, I've wanted a way to play Disney. I'm going to probably be a coward, not buy shares, and probably do some poor boy cover call. I haven't done a poor boy cover call in like 7 months, but I'm trying to find creative ways to go directional, in a market that keeps slapping me down every time I do. Boston Science, I like the company. I like give me a multi-year breakout in an area. I'm going to want to do that. Macy's, GDX, I'm already in. I'm going to do the Comcast. I'm going to do the Macy's. Probably not going to do Tesla because I just don't trust directional. There's nothing wrong. It's probably the best trade of the bunch, right? It's probably like that's the trade when we look back 5 weeks from now. That's the one that made all the money, right? That's going to do the money. I got nothing wrong. I'm going to give it to Tyler tonight because he has some coward ways that I'm going to actually play. Disney, I love the trades though, Greg, and maybe I'm just giving it to Tyler because you've won like a billion weeks in a row. I don't know, right?
It's all good stuff.
Don't water this down, Mark. Don't water this down.
But these are all good trades. Like this is and what I like about it tonight is you can find what you want here. You want to be conservative, go some cash flow route, they're there. You want to go directional, be a little aggressive, they're there. I got a little bit of what I might be in the mood for, and I got different. You guys gave me a retail stock, a healthcare stock, consumer discretionary in Disney, whatever abysmal thing Comcast is in these days. I got a high flyer in Tesla. I got to go. Not only did I get a bunch of different ways to play, I got different areas of the market too. To put in that home run session, you're both winners. Tyler, you and your clean face, Jedi, young, whatever, you get the final word.
Listen, don't listen to anything Mark just said. The operative phrase was Tyler won. The rest was just blah, blah, blah. I'm back on top. order has been restored in the world. I'll see
I
you all
regret
next week.
decisions that have been made already. Anyways, I'll see you back soon, Greg. I mean, seriously, you've dominated the last month, and rightfully so. You're really good at what you do. This has been beautiful. This has been beautiful. Let's make some money from this. Let's be responsible. Let's continue to communicate. If you want to be part of this awesome community and see Greg and Tyler consistently through the week, sign up for a 15-day trial on Tackle Trading. It's an awesome community. Give us a shot.